On show with us, Kunal Bothra as well as Devang Mehta. Kunal, hi, good evening. Let me start off with you. 15K here, although we couldn't quite hold on to that level. But what next are you mapping on the Nifty?
So, good evening, Aisha. I think it's a month of landmarks for the indices. First, earlier 50,000 on Sensex, now 15,000 on Nifty. And let's just hope that this uptrend would probably continue for at least some more time before we go into a bit of a pause. But I think this week was a completely I would say stellar kind of a week for the markets. It was not just the index price moves, but it was the kind of ferocious upticks which you saw into stocks. It was as if the bulls were just about let loose in the markets in many of the individual names. So I don't remember last time seeing SBI up 10% right at the first tick of the open, which we saw on Friday. So I think that was some, bit of a rare sight to see post budget as well. I think the markets got back into the thick of buying frenzy. As you mentioned, correctly, that I think except for the Nifty IT index, which underperformed but still was closed in a positive territory. But you still have so many of the other sectors and stocks which look attractive, whether it was the metal names, the realty stocks, PSU banking names, even the private banking stocks like ICICI Bank, etc. as well, managed to hit back and make a fresh high for themselves. So I think the markets are abuzz with a lot of the stock specific action, and I think that adds to a lot of positivity for traders who are looking out for stock specific price action. So whether you are riding momentum, which is there in specific pockets of stocks and in the specific pockets of sectors, or whether you're looking at playing contrast strategies. For example, what happened with pharma names? I think Dr. Reddy was down some 20% or 25%, if I'm not wrong, from its 52-week highs, and look at how the stock has managed to recover. Same has been the case with many of these other pharma names which are going through a recovery. So all in all, I believe it was one of the much better weeks for the markets, not because of individual specific stocks, but I think it was because of an all-round performance from the market, led of course by the PSU banking stocks and the bank nifty overall.
In a view as to how you've looked at the markets and what the road ahead is for those PSU banks. Best week since October 2017, and that index alone put on a solid 25% this week, while IT rose the least. Do you think that we're likely to see this sort of a change in the texture of the market with a lot more leadership in high beta pockets like real estate, metals, PSU banks vis-a-vis IT? Devang, that was for you.
Okay. I did that. Yeah. Thanks for having me on the show. I think probably yes. What we are seeing in this phase of the market is that a lot of laggards have also come back to the fore. So if I can map the market from last March, April to maybe around this 10-11 months time frame, I think a lot of sectors have probably changed hands, and it's also sector churning which is going on big time in the market. It started off with FMCG, IT, pharma, healthcare, and I think even then Reliance came to the fore. Metals, cyclicals, global cyclicals. I think every sector had a go. Even auto sector, which probably was ailing for the past couple of years, had a good time in the last 3-4 months. So more or less what we are seeing is right now a lot of PSU stocks and also PSU banks, which probably had underperformed for the last almost 5 to 7 years. All of those have also started to come out, with some of them with decent numbers, some of them with a promise of a turnaround, and some of those just as a play to just counter the leaders cycle and just take a laggard forward. So I think this type of a rally where even traders are invested, where some investors are interested in sort of value stocks, where growth has already played its part. I think that's more or less playing out. But I'll be a little cautious at this point. While though fundamentals have improved, macros have improved, earnings have been terrific, and also the budget has been a catalyst towards the market. But all the stocks and the market breadth improving here on, and also a lot of laggards coming to the fore, a little bit disturbs the complexion of the market.
Okay, that's a view coming in on the complexion of the market. But let's also get in a view as to what the outlook is, Devang. When it comes to the auto space, we understand that there may be some sort of a tweaking in the PLI scheme for the auto and auto components sector. What's your sense, and what are you penciling in when it comes to the earnings from the rest of the auto basket?
I think yes, Autopack probably was sort of down in the dumps for the last couple of years, but last 3-4 months, right from the festive season cheer, the Diwali, Dussehra cheer, to in fact the pent-up demand coming back, plus of course the COVID-led demand of people wanting to own a personal vehicle, be it a two-wheeler, be it a four-wheeler, or even a small car. I think all this has come back to the fore. Along with this, because of the rural India thriving well, tractor demand has been coming back. I think auto ancillary and auto component companies, even tire stocks are seeing replacement demand as well as the OEM demand coming back. Sector seems to be probably in good shape right now. It plays its role in terms of its cyclicality, but right now with the PLI scheme probably being thought about for auto sector, I think also another very important part for auto sector is a lot of these companies have sort of created operating efficiencies, and the capital allocation plan for a lot of such companies was haywire last couple of years, but that has been sorted out. So I think yes, it seems to be right now in sort of investors' radar, and some two-wheeler stocks as well as some four-wheelers will continue to do well for the next 1.5-2 years.